Let's welcome in our panel, Treasury Partners Richard Saperstein and SoFi's Liz Thomas. Good to have you both with us.
Thank you.
Are we going to continue this record run for stocks?
We will, and it's interesting because earnings are accelerating, yet multiples are compressing. And all I can attribute that to is the fact that the hyperscalers are now being, or have been, valued as capital intensive and asset heavy versus asset light. And I think that's a mistake because it would be justified if these companies were not showing growing earnings, growing profits, and growing operating cash flows. But they are clearly way ahead of the game. Last quarter, 30 to 60% cloud growth, and that's going to continue, and eventually it's going to get valued by the market. So I would stick with the hyperscalers, the large cap tech, because I think the market's going to re-rate over time. You saw the Meta announcement today, and that's only going to reinforce that trend.
Do you agree?
I do agree. I think directionally in the second half, the movement is going to be higher. I do think that semiconductors continue to see volatility. I would expect a little more downside in that space just because of the big run they've had.
Okay.
But I think the Meg 7 comes back and gets back into the forefront, and the hyperscalers as well. I mean, every time in this market throughout this cycle that we've had any volatility, and I think we will have volatility into fall, investors continue to flood back into those big names. Now, in the first half, they lagged, which I think surprised most investors. But in the second half, I think they come back in.
Wow, so neither one of you are really big buyers into the idea you're going to have this big broadening move away from the hyperscalers.
I think
you don't think the juice has been squeezed, so to speak, from those names, at least in the near term, and now we need to see more of the show me on the return on all this investment that they're doing?
Okay, there's a couple of dynamics here. First of all, the broadening, sure, it can happen, but look at the PEG ratios, the price earnings ratio to the growth rates. You look at the more traditional consumer stocks, it's 5, 6, 7. If you look at large cap tech, it's 1. So you're paying 1 times for the growth rate versus, let's say, a Kimberly-Clark, a Coca-Cola, Procter & Gamble.
The current growth rate.
Correct.
But what happens if, well, we don't assume that growth rate is going to continue at this clip in perpetuity.
Well, that was reinforced today with the Meta announcement. And if you look at the growth of the operating cash flows of these companies, you take Microsoft over the last 3 years, their OCF has doubled. That's doubling to what, $200 billion a year?
Well, how come that stock has done absolutely nothing?
That's why it's probably a great value right here. But the second trend that's important is this concept that the beneficiaries of the spend have benefited more than the spenders, right? So the Ciscos, the Dells, the Aristas, the Amphinols, which we own, okay? But I think that trend will continue, yet you still want to own the large cap hyperscalers. I like that business.
Don't you, if you have, let's say, tech here and then everything else here, and from an earnings standpoint, it's been like this, but then we're slowly, as the quarters go on, we start to go like this, and we get all these other areas of the market that start to show like really, really robust earnings growth, not just low double-digit percent, but 20 plus.
Well, look, I own half a dozen stocks away from tech, and they're on a relative basis more expensive than the large cap tech right now because, as I said, earnings are growing at an accelerated pace, multiples are coming down. I think the risks are something that we should discuss very quickly, which the circularity of what's going on between the needed IPOs of Anthropic and OpenAI is going to impact the remaining performance obligations of the hyperscalers. And you just heard OpenAI pull the offering to following year. And that's one of the risks that we should be thinking about as
well. That's not definitive.
It's not definitive, but we always look at what tail risk events could occur. Obviously, a restart of the conflict in the Middle East would impact oil prices. Market won't like that on a short-term basis, but also the circularity and some dynamic that changes that might impact the hyperscalers.
I noticed you have one of your most recent buys is Apple.
Yeah, Monday.
What took you so long?
I just added to the position. So I've only owned it for like 14 years.
Okay.
Okay.
So you just so I'm sorry, you did add to it.
It's not a newbie.
And PWR too, you added to. So you still like the same themes.
Yeah. So that's. But Apple is interesting because they never got into the arms race, the AI arms race, and now they can simply adopt Gemini into Siri. And any small modification or improvement of Siri, like, can I search an email for when my flight is landing in Minneapolis tomorrow? Okay, you can't even do that now, right? And so any improvement is going to further spin their flywheel and sell more iPhones.
Okay. All right. Good stuff. Guys, thank you. Liz Thomas, good to have you. Rich Saperstein, you as well. We'll see both of you soon.